Welcome to International Management, the podcast that breaks down the core challenges and strategies of global business. Based on Orlando Casabon's scripts for his international management class, each episode offers practical insights, clear strategies, real-world examples, and expert guidance to help you navigate complex global landscapes. For additional resources, visit casabon.com. Now, let's dive into the essentials of international management.
Welcome to another deep dive. Today we're tackling international trade and investment theories.
Really fascinating stuff.
Yeah, it really is. I think a lot of people have a kind of a surface level understanding of these things.
Yeah.
But we're really going to go deep like we always do.
Yeah, absolutely. We're going to kind of trace how thinking about these things has changed over time.
Yeah.
Starting with, those early theories.
Right, from the very beginning.
That focus on, countries and basic goods.
Yeah.
And then moving into the more modern theories that consider companies and brands.
Right, the whole global strategy.
Yeah, exactly.
So to really understand where we are today, we need to go back to the 16th century.
Okay.
The age of mercantilism.
Ah, yes.
Mercantilism. Kind of like it's a world obsessed with just amassing wealth.
Right.
Through hoarding gold and silver.
Exactly.
And they really believed that the only way to prosper was to maximize exports.
Yep.
And minimize imports.
Right. So they're trying to basically sell as much as they can to other countries.
Right. And buy as little as possible.
Right. So it's kind of like a very zero sum.
Yes. Very much.
Kind of view of the world.
Yeah. One country's gain is another country's loss.
Right. Yes. Like a dragon guarding its treasure hoard.
Right.
But as we know from history, most dragons get slain eventually.
That's right. They do.
And in this case, the hero is Adam Smith.
Our economic hero.
Yeah, he comes in 1776 with his idea of absolute advantage.
Yeah, he really kind of revolutionized the way we think about trade.
Yeah.
And his argument was basically that countries shouldn't try to produce everything themselves.
Right.
They should focus on producing and exporting what they can make more efficiently than other countries.
Yeah, like playing to your strengths.
Exactly. It's like, each country has its own unique strengths and weaknesses.
Right.
And it makes sense for them to specialize in what they're good at.
Yeah, it's like, realizing you're a terrible plumber. But a great baker. So you bake cakes, and you trade those cakes with a plumber who can fix your leaky faucet. I like that analogy. That's a good one.
Yeah.
So yeah, it's like, you're trading your strengths for somewhere else's strengths.
Right.
And everyone benefits.
Right.
But even Smith's theory, it left a few questions unanswered.
Okay. Oh, like what?
Well, what happens if one country is simply more efficient at producing everything?
Okay, yeah.
Does that mean there's no room for trade?
Interesting.
So that's where David Ricardo comes in.
Okay.
In the early 19th century.
Okay.
With his theory of comparative advantage.
Comparative advantage.
Yeah, this is where things get really interesting.
Oh, yeah.
Because Ricardo argued that even if a country has an absolute advantage in producing all goods, it can still benefit from trade by focusing on what it's relatively better at producing.
Relatively better. What does that mean?
So it's all about opportunity costs.
Opportunity cost. Now, remind me what that is again. I think I slept through that Econ 101 lecture.
Yeah, no worries. It's basically the idea that every time you choose to produce one thing, you're giving up the opportunity to produce something else. Okay. So let's say you're a fantastic programmer and a gifted musician.
Okay.
You could spend an hour coding a brilliant new app.
Okay.
Or composing a beautiful song.
Got it.
The opportunity cost of coding is that lost potential of creating that song.
Okay, I see.
And vice versa.
Okay, so it's like, even if a country could produce everything better than anyone else, it still makes sense to specialize.
Exactly.
And trade for those other things.
It's about maximizing efficiency on a global scale.
Right, right.
So even if you're the best at everything, you can still benefit from trade.
Interesting.
By focusing on what you're relatively the best at.
Okay.
And then we have the Heckscher-Ohlin theorem.
Heckscher-Ohlin theorem.
This comes in the early 20th century.
Okay.
And it kind of builds on these ideas.
Okay.
And it focuses on factor endowment.
Factor endowments.
Yeah, it sounds a little technical.
Yeah.
But it's basically the idea that countries will naturally export goods that utilize their abundant resources. So, for example, a country with vast oil reserves will likely export oil.
Right.
while a country with a large skilled workforce might focus on exporting high-tech gadgets.
Okay, that makes sense.
So it's like each country is playing the hand they were dealt,
Right.
using their natural advantages to participate in the global marketplace.
Okay, so we've gone from hoarding gold
Yeah.
to understanding the benefits of specialization
Yep.
based on relative strengths and available resources.
Exactly.
But all of these brilliant theories were developed in a world before the rise of powerful multinational corporations.
That's right.
And things changed pretty dramatically after World War II.
Yeah, the landscape of international trade really shifted with the emergence of these massive companies that could operate across borders.
Right, so we get a whole new set of theories that focus more on companies than just countries.
Exactly.
And one that I always find fascinating is Raymond Vernon's product life cycle theory.
Oh, yeah, that's a classic.
Yeah, it emerged in the mid-20th century.
Yeah.
And it really highlights how a product's stage of development
Right.
really influences where it's produced and how it's traded.
Yeah, so, a product goes through different stages.
Right.
From its initial introduction
Brand new.
to its mature phase,
Okay.
and then finally to its standardized, almost generic stage.
Okay.
And each of these stages is associated with different production and trade patterns.
Okay, so like imagine a cutting-edge smartphone that just hit the market.
Yeah.
It's probably designed and manufactured in a technologically advanced country.
Right, somewhere with a lot of expertise.
Right, yeah.
In that particular field.
But then as it becomes more established
Yes.
and production becomes more streamlined, it might shift to countries with lower production costs.
Exactly.
And then finally it kind of becomes a commodity.
Right.
Almost.
Almost generic, produced wherever costs are lowest,
Right.
regardless of where it was originally invented.
It's like a global relay race.
I like that. Each country playing a role in the product's journey.
Right, and then we have Stefan Linder's country similarity theory,
Okay.
which kind of focuses on consumer preferences.
Yes. This one's all about taste.
Yeah?
And income levels.
Right.
So the basic idea is that countries with similar income levels and tastes tend to trade similar types of products.
Okay.
So, it's why we see luxury car brands from Germany and Italy competing fiercely in the U.S. market.
Right.
They're all catering to consumers with similar levels of disposable income
Yeah.
and a taste for those high-end automobiles.
Right. It's like a global fashion show.
Yeah.
With countries kind of strutting their stuff.
Showing off their best products.
Yeah, and appealing to consumers with shared preferences.
Right.
But these theories, while they're insightful,
Yeah.
they still didn't fully capture the nuances of global trade in the late 20th century.
That's right. Things were getting even more complex.
Yeah.
With the rise of globalization.
Right, and so we get the new trade theory,
The new trade theory, yeah.
which emerges in the 1970s and 80s.
Yeah, this one really shook things up.
Yeah. What's so new about it?
Well, it recognizes the power of economies of scale.
Economies of scale.
Yeah, the idea that producing more can actually lower your per unit cost.
Oh, okay.
So the more you produce,
Yeah.
the cheaper it becomes to make each individual unit.
Okay.
And this can give companies a significant advantage in international markets.
So it's not just about what a country is good at producing,
Right.
but also how companies can strategize
Exactly.
to become global powerhouses.
Yeah, it's about making strategic decisions to expand your reach,
Right.
lower your costs, and ultimately dominate your industry.
Right. It's like a high-stakes game of chess,
It is.
where companies are constantly making moves and counter moves on this global board.
Absolutely.
And speaking of competitive advantage,
Yes.
we can't forget Michael Porter's famous theory.
Porter's Diamond.
Porter's Diamond, yeah.
One of the most influential frameworks in business strategy.
Yeah. So this theory really highlights those four key elements that contribute to a nation's success
Right.
in specific industries.
So we're talking about factor conditions,
Okay.
demand conditions,
Okay.
related and supporting industries,
Okay.
and then firm strategy, structure, and rivalry.
Okay, so it's like a recipe for success.
It is.
Let's break down those ingredients.
Okay.
Okay, so factor conditions, what are those?
So factor conditions refer to a nation's resources, infrastructure, and skilled labor.
So those are like the basic building blocks.
Exactly the foundation for any successful industry.
Okay, what about demand conditions?
So demand conditions are all about the size and sophistication of the domestic market,
Okay.
which can actually drive innovation and push companies to create world-class products.
So demanding domestic market can be a good thing?
It can be a great thing
Okay.
because it forces companies to really up their game
Okay.
to meet the needs of those sophisticated customers.
Right.
And that can make them more competitive on a global scale.
Interesting. Okay. And related and supporting industries?
Yeah.
What's that about?
So that's all about having a strong ecosystem of suppliers, partners, and collaborators within a country.
Okay.
So think Silicon Valley,
Right.
with its concentration of tech companies, research institutions, and venture capitalists.
Right. So it's like having a whole team of superheroes working together
Exactly.
to create something truly extraordinary.
Each with their own special powers.
Yeah. Okay. And finally, firm strategy, structure, and rivalry.
Right. So this element is all about the level of competition within a country.
Okay.
And Porter argues that intense domestic competition actually forces companies to innovate, to improve their efficiency,
Gotcha.
and become more globally competitive.
So it's like a boot camp for businesses.
It is a training ground for the global marketplace.
Wow. Okay. So when all four of these elements are strong and aligned,
Yes,
it creates this unstoppable force
it does.
for national competitive advantage.
Exactly. It's like all the stars aligning
Yeah.
to create the perfect storm of economic success.
Okay, so we've covered a lot of ground here, from the age of mercantilism to the rise of multinational corporations and all the intricacies of national competitive advantage.
Yeah, we've seen how thinking about international trade has really evolved over time.
Yeah.
From a simple focus on countries and basic goods
Right.
to this much more nuanced understanding of company strategy and global competition.
Right. But this deep dive wouldn't be complete without exploring the crucial role of international investment.
Absolutely. We need to talk about the flow of capital across borders.
Yeah. Let's shift gears a bit and delve into that world.
Okay, so we need to distinguish between two primary types of international investment.
Right.
We have foreign portfolio investments
Okay.
and then foreign direct investments.
All right, so foreign portfolio investments are kind of like dipping your toes into the global financial pool.
Yeah, it's a more passive approach.
Okay.
It involves investing in stocks and bonds of foreign companies,
Right.
often to diversify a portfolio
Right.
and seek returns in different markets.
Okay, so it's like buying a little piece of a company
Yeah.
in another country,
Exactly.
hoping it will grow and prosper.
Right.
But foreign direct investments, or
Yeah.
FDI,
Yes.
that's a whole different ballgame.
That's a much deeper level of commitment.
Okay.
It's about actively acquiring assets abroad
Okay.
to gain control and influence over a foreign company or operation.
So it's not just about seeking financial returns.
No.
It's about establishing...
It's about a physical presence.
Right.
A strategic presence.
Yeah, like planting your flag on foreign soil
You could say that.
and saying, we're here to stay,
Exactly.
and the numbers really speak for themselves.
They do. FDI has skyrocketed since the 1980s.
Really?
Yeah, it's risen from a total of $689 billion to over $31.5 trillion by 2017.
Wow, that's an astronomical jump.
It is.
It really highlights how interconnected the world has become.
Yeah, it shows you how much companies are looking beyond their borders for
Right.
growth and opportunity.
But what drives these massive investments?
Yeah. That's a great question.
What makes companies decide to go all in on FDI?
Well, that's what we'll explore in the next part of our deep dive.
Okay, stay tuned. We'll be right back after a short break.
Picking up where we left off, we were talking about those foreign direct investments.
Right, those big commitments.
Exactly. And the theories behind them, like that eclectic theory.
The OLI framework.
Right. Ownership, location, internalization.
Yeah, but those are kind of the core advantages, right?
Yeah, those are the big ones.
What other factors are companies looking at when they're making those big decisions?
Well, minimizing production costs is always a huge factor.
Okay, makes sense.
Companies are always looking for ways to produce things more efficiently.
Right.
And that often means finding locations with lower labor costs,
Okay.
cheaper raw materials,
Right.
or favorable tax policies.
Right, so it's about maximizing profits,
Of course.
but also staying competitive in a global market.
Absolutely. Every penny counts.
Right.
And then efficient logistics can be a real game changer.
Okay, so,
Well, getting your products to market quickly and affordably is essential.
right,
So companies really think about transportation costs,
okay,
the quality of infrastructure,
right.
and the ease of doing business in a particular location.
So it's not just about finding the cheapest place to produce,
No.
but also the most efficient path to the customer.
Exactly. It's a global balancing act.
Yeah, like a global supply chain.
That's a great way to put it.
Okay,
And then there's proximity to key markets.
right, being close to your customers.
It often makes more sense to produce goods closer to where they'll be sold.
Okay.
This can reduce shipping times,
Right.
allow for quicker responses to changes in demand,
Okay.
and it helps you build those relationships with local customers.
Yeah, it's all about understanding your customers.
Exactly. And then there are marketing advantages
Okay.
that come with a local presence.
Okay, like what?
It's easier to build brand awareness,
Okay.
fine-tune your marketing campaigns
Right.
to local preferences, and provide that top-notch customer service
Right.
that builds loyalty.
It's like speaking the language of your customers.
Exactly, both literally and figuratively.
Right.
Now, sometimes FDI is driven by competition.
Okay.
You know, a company might invest in a country to gain a foothold in a specific market
Okay.
or to access valuable skills or technologies.
So it's a strategic move.
It can be like a game of chess,
Right.
with each move carefully calculated.
But it's not just about economic factors, right?
No, political stability and government policies play a huge role.
Okay, yeah, that makes sense.
Companies need to feel confident that their investments are safe,
Right.
that the rules of the game won't suddenly change.
Right, like political risk is a big consideration.
It's a major factor.
Nobody wants to invest in a country where things are unpredictable.
Exactly. And government policies can be a major draw.
Okay, how so?
Well, some countries offer incentives
Okay.
to attract foreign investment,
Okay, like what?
tax break subsidies, streamlined regulations.
Right, so it's like a competition for investment dollars.
It is a global beauty contest,
Right.
with each country trying to attract those multinational companies.
Okay, so we've got this whole web of factors influencing those FDI decisions.
It's a complex equation with a lot of moving parts.
Okay, so we've talked about the why behind FDI.
Yeah.
Now let's talk about how do companies actually go about expanding internationally?
Well, there's a whole spectrum of approaches.
Okay.
And each one has its own pros and cons.
Okay.
One of the simplest and most common ways to start is through exporting.
Exporting.
Yeah. You produce your goods in your home country,
Right.
and then you ship them off to customers in those foreign markets.
So it's a way to test the waters.
Exactly. A low-risk way to dip your toes into those global markets.
Right.
Now, if a company wants to get more hands-on,
Yeah.
they might consider setting up a foreign sales subsidiary.
Okay. A foreign sales subsidiary, what's that?
It's basically a mini version of your company
Okay.
in another country, but with a focus on sales and distribution.
So it's about building a local presence.
Exactly.
Okay.
And then there's licensing.
Licensing.
This involves granting a foreign company the right to use your intellectual property,
Right.
things like patents, trademarks, or copyrights,
Okay.
in exchange for royalties or fees.
So you're essentially renting out your intellectual property.
You could say that.
Okay.
It's a way to expand your reach without taking on all the risks and costs of setting up your own operations.
Okay, so it's like having a silent partner
Yeah.
in another country.
Working hard to promote your brand
Right.
and generate revenue for both of you.
Okay, and then there's franchising.
Franchising is a very specific type of licensing.
Okay.
Think McDonald's or Subway.
Okay. Those global fast food chains.
Exactly. They've mastered this approach.
Okay, how does it work?
The franchisor grants a franchise the right to operate a business using their established brand,
Okay.
business model, and operating system.
So it's like a cookie-cutter blueprint for success.
Precisely, it allows others to replicate your proven formula
Okay.
in different markets around the world.
Interesting. And then we had joint ventures.
Joint ventures are all about teamwork
Okay.
on a global scale.
How so?
You partner with a local company
Okay.
in the target market
Okay.
to create a brand new entity
Okay.
that combines the strengths of both partners.
So it's like two puzzle pieces fitting together.
Exactly.
Okay.
Joint ventures can give you access to local knowledge resources and distribution networks,
Okay.
while also sharing those risks and costs of entering a new market.
So it's a win-win
It can be.
for both parties.
Right.
And finally, we have wholly owned subsidiaries.
Right. This is the most hands-on approach.
Okay.
It involves setting up a completely independent operation
Okay.
in a foreign market.
Okay.
This gives you the ultimate control,
Right.
but it also requires the greatest financial commitment.
And risk.
Exactly. It's like going all in,
Yeah.
putting all your chips on the table.
So companies have a lot of options
You do a whole menu of choices.
when it comes to internationalization.
It's fascinating how they tailor their strategies to their specific goals, their appetite for risk,
Right.
and the dynamics of their industries.
Right.
It's a complex and constantly changing landscape.
Yeah.
But we can't forget about those born global companies.
Right. They're kind of rewriting the playbook.
They are. They're challenging those traditional models.
Yeah, it's like they were born knowing how to use a smartphone.
Exactly. They just instinctively understand the global landscape
Right.
and how to navigate it.
But going global isn't always easy, right?
I know. It definitely comes with its challenges.
What are some of the biggest obstacles that companies face?
Well, cultural differences are often at the top of the list.
Cultural differences.
Yeah, every country has its own unique culture.
Right.
Its own norms, values, communication styles.
Right. What works in one country might not work in another.
Exactly.
Yeah.
It can be a real minefield.
Yeah, like trying to navigate a foreign city without a map.
Right. You can easily get lost in translation.
So companies need to be culturally sensitive.
Absolutely. They need to do their homework.
Right.
Understand the local customs.
Okay.
Adapt their products and marketing messages accordingly.
Yeah, it's about respect.
And empathy.
Right. Recognizing that the world is a diverse place.
Well said. And then there are those legal and regulatory differences.
Right. Each country has its own laws.
And regulations
Right.
governing business operations.
And those can vary widely.
It's a real patchwork.
Yeah, it's like trying to assemble furniture
Okay.
with instructions in a foreign language.
Right. It can be incredibly frustrating.
And potentially disastrous.
So having expert legal guidance is essential.
Okay.
You need to make sure you're complying with all the relevant laws
And regulations.
in your target markets
Okay.
to avoid any costly mistakes
Yeah.
or potential legal battles.
Okay. What about language barriers?
Language barriers can complicate everything.
Right.
From communication and negotiations to marketing and customer service.
Right. Even with translation software.
Yeah, things can still get lost in translation.
Right. It's like a game of telephone.
Exactly. The message gets distorted with every pass.
So finding skilled translators and interpreters?
It's crucial for any company doing business internationally.
Okay.
You need to make sure your message is clear and accurate
Right.
and that you're not making any cultural faux pas.
Yeah. It's about building trust and clear communication.
Exactly. And then there's the challenge of managing a global workforce.
Oh, yeah. That's a big one.
You've got employees spread across multiple time zones,
Right.
different cultures.
Different languages.
It can be quite a juggling act.
Yeah. It's like conducting an orchestra
Okay.
where the musicians are scattered across the globe,
I like that analogy.
each playing their instrument at their own pace.
You need strong leadership,
Right.
clear communication,
Okay.
and a sensitivity to those diverse needs
Yeah.
and perspectives of your global team.
It's about creating a symphony
Yes.
of global talent.
Where each individual contributes their unique skills
Right.
to the overall success of the company.
Okay. And what about financial risks?
Oh, financial risks are a constant concern.
Like what?
Well, currency fluctuations, economic instability, political uncertainty.
Right. All those things can impact a company's bottom line
Absolutely. It can be like riding a financial roller coaster
with lots of twists and turns.
and unexpected drops.
Right. So companies need to be prepared.
They need to be proactive in managing their risk,
Right.
diversifying their operations,
Right.
and having those contingency plans in place.
Right. So it's about having a plan B.
And maybe even a plan C
Right.
to weather those economic storms.
And then there are those logistical challenges.
Oh, logistics can be a real headache.
Yeah.
Coordinating production, distribution, and customer service across multiple countries.
It's a lot to manage.
It requires sophisticated systems
Okay.
and a lot of coordination,
Yeah, it's like choreographing a global ballet.
where the dancers are spread across continents.
Right. Each performing their part at a different time.
Exactly. Timing and coordination are everything.
Right. So it's about creating a seamless global experience for your customers.
Exactly. They should feel like they're dealing with one unified entity,
Right.
regardless of where they are in the world.
Okay, so going global, it's not for the faint of heart.
It's not. It's a challenging but rewarding endeavor.
Like climbing Mount Everest.
There you go.
You got to be prepared for those challenging conditions.
You do.
Those unexpected obstacles.
Absolutely.
But the view from the top is breathtaking.
It is. The rewards of international expansion can be enormous.
Like what?
Well, new markets to conquer operations, diversified across the globe, access to a vast pool of talent and innovation.
Right, so it's about pushing boundaries,
Exactly.
exploring new horizons,
Absolutely.
reaching your full potential.
As a global business.
Right, and technology is really changing the game.
It is. It's lowering the barriers to entry
Right.
and creating new opportunities.
Yeah, it's an exciting time to be involved in international business.
It is. There are new challenges and opportunities emerging every day.
But let's take a step back for a second.
Okay.
how do all these theories and concepts
Yeah.
really help us understand this complex landscape?
That's a great question.
What are the key takeaways for companies?
That's what we'll explore in the final part of our deep dive.
All right, stay tuned. We'll be right back. All right, so we've covered a ton of ground in this deep dive.
We really have.
From, centuries of economic thought
Right, as early theories.
to, all those motivations behind global expansion.
And all the challenges, too.
Yeah, all those challenges of actually doing business in this complex world.
It's a lot to take in.
It really is. So let's try to distill some key takeaways for companies looking to compete on the global stage.
Okay, so think of this as our treasure map, highlighting those key insights.
I like it.
From our deep dive.
All right, let's unlock those insights.
Okay, the first and most crucial lesson is you've really got to understand your competitive advantage.
Right, what makes you stand out?
Yeah, what are you good at?
Yeah.
How can you leverage those strengths on that global stage?
So it's like finding your superpower.
It is.
And then figuring out how to use it to your advantage.
Absolutely. Whether you're a company or a country, identifying what you excel at and how to use those strengths globally is paramount.
Right. Focus on what you do best.
Exactly.
Whether it's cutting-edge technology or amazing production or a really powerful brand.
Or unique access to certain resources or skills.
Right. And don't be afraid to specialize.
Right. Specialization is key.
The theories of absolute and comparative advantage really emphasize that.
They do.
Focusing on what you're relatively best at.
Right.
It can lead to greater efficiency.
And benefits for everyone involved.
Yeah, it's like finding your niche in that global ecosystem.
Exactly.
And becoming the champion of that particular domain.
And then, as that new trade theory emphasizes, economies of scale can be a huge weapon.
Right, the bigger the better.
Well, not always, but producing on a large scale can definitely lower your costs.
Right.
And make you a more formidable force in those international markets.
Yeah, so it's not just about being good at what you do.
No.
It's about doing it on a massive scale.
It can certainly help.
But size isn't everything.
Of course not.
Innovation and differentiation are still critical.
Absolutely. In today's world, companies need to be constantly evolving, coming up with new products and services. I like that. And if you're thinking about expanding internationally, really take the time to assess those location advantages.
Of different countries.
Yeah, think about production costs, access to resources, and talent proximity to those key markets, political stability, government policies.
It's like finding the perfect spot for your global headquarters.
Exactly where all those pieces fit together.
To create a fertile ground for growth.
And don't forget about those internalization advantages.
Right. Sometimes it's better to keep things in-house.
It can be.
To maintain control or protect your intellectual property.
It's about finding that right balance between control and flexibility.
Right, and technology has really changed the game when it comes to international business.
It's a whole new world.
Companies can connect with global audiences.
Yeah.
Build online businesses, manage global operations.
It's remarkable what you can do with technology these days.
Yeah, it's really an era of unprecedented opportunity.
For those who are willing to embrace it.
But global success comes with responsibility.
Absolutely. Companies need to operate ethically, sustainably, respecting human rights, and contributing positively to those communities where they do business.
It's about building a business that's not just profitable, but also a force for good in the world.
Exactly.
So to wrap it all up, international trade and investment.
Yeah.
These are powerful forces that shape our world.
They really are.
They connect us in ways that we never could have imagined before.
And by understanding those fundamental theories and concepts, we can really unlock those insights into how this global economy works and how businesses can thrive in this ever-changing landscape.
And it's all about leveraging your strengths, adapting to change, embracing those challenges and opportunities, and building a business that's both profitable and a force for good.
Couldn't have said it better myself.
So keep learning.
Yeah.
Stay curious. Stay informed.
The world is your oyster.
Thanks for joining us on this deep dive into the fascinating world of international trade and investment theories.
Until next time.